Hello, and welcome to another AAIS webinar. I'm John Kadous, Head of Products at AAIS. Today, we will be taking a look at overcoming today's auto insurance challenges. I'm joined by AAIS's Product Manager of Auto, Ash Naik, to talk about the current market conditions that are pushing carriers to the limits. We'll also discuss the growing need for adaptable solutions and tools that can empower insurers to confidently navigate the industry's shifting terrain. Ash, thanks for joining us today.
Thank you, John. This is going to be a great session today.
Yes, it will be. So let's get the conversation started. Well, actually, even before we do that, I just want to let everybody know we will be doing a live Q&A session at the end of this. And at the bottom of your Zoom screen, you'll see a spot there for Q&A. Please go ahead and put your questions in there. We will try to get to as many of those as possible at the end of the webinar. All right, Ash, let's get the conversation started talking about cars.
Yep.
You know, they have more electronic innovations than mechanical innovations anymore, right?
That is correct. In recent years, we are seeing cars with a lot more electronic hardware, software, and technical innovations that are moving towards not only making sure that the vehicles operate better, but they are making them safer and that much more pleasurable to drive, right?
All right. So today, cars are delivering a smoother ride and providing new advancements like smarter braking. What are some things contributing to these new advancements?
The number one thing that is interesting is the replacement of LiDARs with radars, right? So that is making cars a lot more smoother because cars and the techniques and these computers within them are better able to track moving as well as stationary objects better. So instead of hitting and slamming the brakes like you would have seen the earlier models with automatic braking or safety features, cars are a lot more smoother. They slow down, they project where the collision can happen, how best to protect themselves and give a better experience. So rides are getting smoother and the braking is getting even smoother as well. And the precision of the radars as well as the techniques of improving the ride quality is getting better. And that is, I think, very, very cool. And that's why we enjoy cars that much more, I guess.
All right. So ride quality wrinkles definitely being ironed out, smoother braking, all that, but our cars really becoming safer as a result.
Yes. So if you look at the upward sloping number lines around here, so the green and the blue lines, the number of drivers on the roads are increasing in the US. The miles that we travel are increasing. In spite of that, deaths per million vehicles is at a historic low. They started very high about 100 years back, and then it just kept on going down, and it's pretty much flat. So except for the blip that happened with COVID, we can generally say that cars are becoming better and better at making sure that we are safe, not only for people inside the car, but also outside the cars on the roads.
All right. And are we at this point coming out of that COVID valley?
Yes, we are. If we look at the way we are finding trends, if we start at looking at fatalities, which is what we just started in the earlier thing, right? Compared to 2020 was higher than 2019. Obviously, that was not really a big thing, but 21 is even more higher in terms of fatalities. So 10% more fatalities, even though the miles travel increase about 8%. So it's catching up. The rate at which these incidents happen are back to pretty much back to the pre-COVID levels. Now, if you look at injuries, which is the next component that we look at, those were up as well, significantly higher than 2020. So it is getting back to the pre-area ones. Now, if you look at crashes or accidents that happen, we change the terminology over there. there's about 6 million or so police reported non-fatal crashes that are happening. Now, that is up 16% overall compared to last year. So, overall, the way in which we get into a mess, it seems to be getting worse or going back to pre-COVID levels. Even though historically we still are considered to be in a flat region, it's still much higher compared to what we were doing before.
Okay. So are these really expensive technologies not working?
According to Hildy and IHS, they not all features work very well, right? Some work better than the others. And we had this conversation earlier as well, where the features that really work, like automatic emergency braking, both front and backwards, were only available in the higher end models, but we were not really sure. But we really didn't know which of these work, right? So we are trying to figure out which ones work. And if you look at the numbers over a period of time, we find that AEB definitely works, which was not available in a large number of models. But lane departure, blind spot detection, rear view mirror, rear view cameras, all of these are making a difference, not as much as the automatic emergency braking.
Okay. All right. Some of the nuances, if you will, of driving with these features tend to scare drivers a little bit. So, buzzing, beeping, shaking, tightening seat belts, they can kind of scare people if they're driving something they're not familiar with, or, they say they've just bought a new car or whatever it may be. Is that more of a distraction than a help?
It seems to be a distraction when we start with. For new cars, or you just get into a different car. So, for example, I rented a car some time back, and that had quite a few features, like the buzzing and beeping. I had to really figure out exactly what it meant because I did not know. I was not very familiar with the car, and that happens with the statistic that I saw from IHS, that 2.5% of new cars are total, which is why I think we charge a premium for a new car in the model year that it is introduced. So getting the driver and the cars familiar with each other seems to be a little harder problem with a lot more newer and non-standardized technology that comes in. So when you get a car, you kind of like go through the features, but then there's always going to be a feature that you don't remember when it actually activates and causes a bunch of, I might say, distractions that are unwelcome. You want to be hitting the brakes, swerving, trying to do something, as opposed to looking at the dash, trying to figure out, oh, what do I do now?
All right. So, over time, we've seen that certainly loss performance for all vehicle models is not the same. It depends a lot on how the vehicle is built. It depends on the demographic that tends to drive a particular vehicle sometimes when you really start looking at losses. Are losses higher in some models compared to others?
Yes, they are. We kind of like see that the the uh, the higher end models, which have the best of the features, tend to have a lot lesser losses, lesser incidents, but not really volume. We'll talk about that when we just come to that. But a lot of these features that were built uh, as something that were safety were really not working as we look here. So lane departure warning, like we talked about, buzzing and beeping that happens, and you're trying to figure out exactly what is happening. That really might have contributed towards losses more than helped. But the higher end models that had automatic emergency braking definitely did, and it was just not that prevalent in the cars that were shipped out in the last few years. But that is going to be changing pretty soon.
Yeah, and I'll just kind of add on to that. We talk about the higher end trim levels of a car and how they sometimes perform worse from a severity perspective. I think of a Chrysler 300 that I had a few years ago that had this nice big camera dot like that right in the middle of the front bumper. And like, yeah, I think a simple thing of bumping into, not that I would do this, but bumping into another vehicle in the parking lot, anything like that. It's like that could definitely trigger a much larger loss than it would have in a lower trim model that didn't have that feature.
Yes, absolutely. Even the shopping carts tend to damage vehicles quite a bit
They do.
more.
Yes, they do. So one of the key things that we see out there today, or one of the key features, AEB, autonomous emergency braking, or automatic emergency braking, and that is one of these things that has tended to be in those cars that we're just talking about, those ones that are kind of in the higher trim levels. And sometimes to get those features, well, you're buying a whole package of features, some of which you really don't even care about. So what does the adoption of these useful technologies look like, considering things such as the requirement to buy a much more expensive car to get to some of these safety features?
Yeah, so we've seen this over the last year and this year that a lot of the large manufacturing companies, Toyota, GM, Honda, Stellantis, have pledged that 100% of their cars will have automatic emergency braking. They saw the benefit, they saw the data, and they realized that that is something that cannot be on the highest end trim. It's like the airbag. It has got to be in all cars, and they are making that happen, and they are pledged to making sure that that happens. So, according to Statista and IHS, we kind of like are expecting about 99% of cars shipped this year and beyond will have these features. So that is very, very good news. The other features, not so much. So I think adaptive cruise control for one of those things, which is like, yeah, great to have, nice to have, not really going to be very important in terms of in terms of safety, if you will. And that is reflective, and we can see that it's kind of like there. So going forward, will get better, but we are not there at this point, right?
Okay, yeah. So at this point, where are we? It's obviously, as with any new safety technology that's been built into built into new cars, there's a time gap between when it first hits the market and those higher end ones. Time to get down to really kind of across the entire fleet of new vehicles. But even
Yeah.
then, it still takes time. So what does it look like today?
So according to NHTSA, and you can see this in this chart above, the top chart kind of like talks about the fleet on the road in the US. And between 20 and 22% of the vehicles on the road have AEB, which is the most useful feature in terms of avoiding losses. The 80% do not. And this will kind of like change very, very quickly because of the thing that we talked about, which is like it is going to be an entry-level feature on all cars. So it's just a matter of going through the current fleet and then upgrading it to the newer models, which are a lot more safer.
Okay, and also, as we know, the average age of cars is going up. So average age of vehicles in the fleet nationwide has not been a static number at all.
Yeah.
It seems to be getting older and older.
Yes. So according to NHTSA, I think the average age of the vehicles has gone up from 11.4 years in 2020 to 12.2 in 22. So cars are built better. They last a little longer. So people will tend to try that as well as the fact that the newer cars are way more expensive than what we are kind of like used to. Higher interest rate and better technology in cars that kind of like lock or open up features is not making it easy as well. So it is kind of like a mixed bag of innovation that is kind of like affecting that adoption of new features. But it's going to happen. It may take a little longer, but we are on that path.
All right, so we've got these new technologies entering the fleet. We're seeing some reduction in accidents, but how is it impacting losses? How is it impacting insurers?
Yeah, definitely, like even though we talk about flat losses, like flat number of incidents that are happening, the claims are going down, but the severity is increasing. Now, this chart kind of like from LexisNexis kind of like demonstrate both for property damage as well as a bodily injury that the trend is on upward. So people are definitely uh, getting hurt, and it's probably a combination that 1 in 5 cars do not have these features, but 4 do not. So there are very few cars with this useful technology, and the older ones kind of like keep on uh, staying around, and that causes that that cost to go up. And I think we'll just talk about that in just a little bit. The way the design of the vehicles don't help it either. So um, these expensive cars are expensive to fix. So we talked about that in just a bit, about like even a small ding can kind of like cost quite a bit when you think about it.
Yeah, and I know some people comment that it feels like they're driving around on a computer these days.
Yes. Cars today, Kelly, can you just go to the next slide? Yeah, cars today have a lot more sensors. They are everywhere. They're replacing them. They're getting smaller, but they're also on bumpers, grills, side view mirrors, uh, and those are places which get hurt very easily and very, very quickly. Uh, it's all cool. If you have so many different views at looking at where you are with respect uh, to your surroundings, but that comes at a cost of all of these small things that, when damaged, need quite a bit of money to get fixed and back to the same point that they were before.
All right. So let's discuss the current market. What does the auto insurance market look like today?
Uh, Auto insurance is, like, we all know this. It's interesting. The every single state operates it's like a separate market by itself, and it's not just the size, it's not just the regulation, it is also the participation of carriers in each of these markets. So we have a range of between 27 and 86 across the US. That's pretty large range of the number of carriers that are operating. So 27 in DC, small market, small, a lot of other issues along with that, versus Indiana, which has got 86, which is not really a very big market, but it still has got a lot more competition. And all of the other states kind of like fall somewhere in between, and they all operate like very in interesting ways. So I'm sure everybody here kind of like knows that it is quite a bit of a challenge when you want to like go into a new market or consolidate or expand into the one that you're already working.
All right. So I think we can all agree that it's been a challenging market. Um, what about the large markets? You know, California, Texas, Florida, New York, those really large markets, those large opportunities or large threats, depending on a number of different factors.
Yeah, so very interesting question, and I've been trying to think about them, and I think I've been having discussions with a lot of people about that as well. California, for example, it is struggling with regulatory approvals. It has got a decent sized market, but I mean, the size of the market is pretty large. It's decent in terms of competition and there, but there are more opportunities there than we think about. We are just waiting on approvals from California for a very, very long time, I must say, on the AIS side. Florida, much less competitive. It struggles for a whole different set of reasons. The overhead of maintaining a program in Florida seems to be much higher, which kind of like keeps a lot of the smaller folks out, but something that we can kind of like remedy very quickly. Texas is probably the best amongst these big ones, and we have approvals there, so it's all great, and we can keep them up to date. New York could use a lot more competition. It's getting pretty close to a very lucrative market, but it's a good opportunity, and I think we are working closely with the insurance department there just to make sure that our program goes through. And once we do, I think we'll open up more opportunities to our members as well as the industry.
All right, those are interesting statistics, and let's talk a little bit about underwriting results. So what's going on with combined ratios? What are insurers really seeing out there?
Yeah, so it's interesting. We were expecting the combined ratios to be high, over 100%, like for a while. S&P Global came back and revised everything upwards, and they are only projecting combined ratio to drop below 100 in 2027. And we know how well that far of a projection we can trust. So the loss ratios are expected to be high, and the combined ratio went up by about 3% in just like a 6 months of experience within this year. So we can expect to see more upward revision in the short term. Maybe we'll come down in the long term, but we just have to work through those challenges and keep an eye on the ground and see what we can do about it.
Right. So do you think carriers are going to need to raise rates in the short term?
That seems to be the simple and easy answer, but very difficult to go through. So if you look at Rate Watch from S&P Global, the range of approved rates this year alone, just like in the last 9 months or 10 months, is pretty wide, between 4 and 37% in Texas. So Texas, Nevada kind of like came up on the top where they kind of like approved a very, very large jump in rates. But it's not it's not a blanket solution. It's not a silver bullet solution that we can kind of like look at. We probably have to think about how best to approach and serve the market that we want to go in, and we have to be a little more targeted, or that's a piece of analysis that we are doing internally, and I'd be happy to talk about it with others as well on trying to figure out exactly what would work best to buy market and buy segment that you're serving within that market.
Okay, but definitely what I'm hearing is that rate increases should be more targeted than blanket.
That is correct. Yes. There are some models that are going to be larger causes of losses than and with the wider and longer and an aging fleet, we can kind of like expect those costs to go up before they go down.
All right. So let's switch over to AAIS for a moment. How can AAIS as a service potentially help the carrier?
So when you think of AIS, think about like well-crafted forms, robust ratings, and ready-to-use digital content so that you can build and deploy a program very, very quickly. Now, AIS Auto program has got both personal auto and commercial auto. So within the personal auto, we have a standard program and a non-standard. And for commercial auto, we have the business auto, motor carriers, and auto dealer program. So making sure that our members and the wider industry can quickly adopt and run a program that we keep up to date and in compliance with where they need to be in all of these markets. That's the biggest value that we bring to the industry here.
All right, terrific. And if you could, can you drill down a little bit on the compliance side for our audience?
So Just in this year alone, we have tracked 64 legislative bills or regulations. And some of the examples were uh, uh, the main issue that came up, which was about uh, mandatory towing and storage for disabled auto vehicles. So uh, we figured out that 51 required no filing actions. 51 of those bills required no filing actions at the moment. That doesn't mean that we will not act on them. We just have categorized them on something that needs action right now, or at a later time when we refresh, or when the due dates for those uh, regulations come up for like in a timely manner. We have completed 11 findings to date, and 2 items are still under review. And I think we added one more just today itself, just to make sure that we catch all of these uh, events that happen in the industry and help our members stay in compliance all across the US.
All right, excellent. So let's drill down to the personal auto program specifically. How is that structured?
Yeah, we have designed the personal auto program so that our members can operate in their markets, and they can customize it for themselves. So we offer it in a very simple manner. So there are standard coverages. Think about BIPD, UM, comp and call, and those standard coverages are pretty much like similar across most of the states, so we cannot keep them in one bucket. Then there are mandatory coverages that are mandated by law or regulation within different states, and then we modify or keep on adding them. Think about PIP or MedPay cover type of coverages. Then we give you a very long list of optional coverages, class, Mexico coverages, things like that, that you can offer to your customers. The overall goal is to empower you to offer choices to your customers and operate in the unique market that you intend to go in. So we would be willing to work with you to try to figure out how best to make sure that you have a program that works well for you in that market.
All right, terrific. So Ash, we're going to shift gears a little bit here. And, one of the popular terms that you hear thrown around internally at AAIS is mind maps. And
Yes.
mind maps are something that we think there's a lot of value to our members in to help them to expedite their implementation of their programs. People really don't understand what the heck it is. So can you talk about it for a moment for those who might not really know what these are?
Yes, absolutely. Mind maps are very, very common in the technology space, and I think that is true because that is the reason we are building them up. The target consumer of a mind map is the implementation team, folks who are going to be coding it into your policy administration system or policy management system. So with that in mind, we take our program and translate it into a language that is clearly and easily understood by your implementation team. So that makes sure that they do not have to interact too much with your BAs or with your product team to try to figure out a very simple question that could be easily answered on a common basis across implementations. Now, we usually take approved products and make them into an implementation friendly format so that when you get the mind maps from AIS, you can be sure that a majority of the heavy lifting is done for you. And think about it as a logical structure that is available to implementation engineers to implement it. Now, we can take it one more step further, and a lot of these newer technologies are able to import the output that we provide in terms of a mind map, and just the basic configuration of your policy administration system is automatically done. Now, that is something that is, I think, a super useful way of saving time in implementation. And based on the asks that have come from our members, we experimented with it, found a good way to operate and build these, and then and we are making that available just to make sure that our members can quickly and easily get up to speed on their programs. So let me show you what a mind map looks like. At a basic level, we give you the like a very a hierarchical tree structure of how our program is defined, and it is very specific to the AIS personal auto program, right? All of our programs come in a similar way. We have a legend about different icons and what they mean. Now, they are very similar in structure to the policy administration system icons that they use. We don't use the same ones. We use something that is very similar, just so that implementation engineers know that there is a one-on-one mapping between what we are offering and what they're coming up. The 6 elements that we have kind of like defined here are very, very common as well. Most implementation engineers will see these as the way they would be implementing within their system. So policy information, the questions that are asked both for underwriting as well as for ratings, as well as so those are the 2 basic things that you would kind of like go after. Then there are coverages like part A, B, C, and D, additional coverages that you can kind of like add on top of that, conditions and exclusions and state exceptions. The way we have designed this based on the feedback that we got from our members is we wanted to have the common elements in a multi-state format. So the top 5 elements stay the same, and the state exceptions modify what is built at a multi-state level. So that makes sure that you are able to implement it very quickly. So let's take a look at like what we offer in terms of detail, right? So if you look at policy information, we ask for a description and there is an effective date. Now we describe the rule that is encapsulated in this note. We give details about, by default, we have set it up as starting at 12:01 a.m. on the declaration. This reflects exactly what our manuals say for the personal auto program. And we keep on adding that level of detail for every single item that we have offered. In terms of personal auto questions, let's go at the underwriting questions. I probably should have turned this one off. We can take, let's say, an example of non-resident owners. Now, we give guidance to the implementation engineer to say that this is unavailable if the ownership is personal or sole owner of the vehicle. But for all the others, you kind of like have to make it a mandatory for them to select that it is a joint ownership. So this is again an implementation detail that makes implementation a little easier. Now, if you go back to the rating questions, we have like an example here, and I'm randomly picking up stuff just so that we do not overwhelm you. We talked about the rules. This is a complex set of logic here. It is triggered when a certain coverage is selected. Maybe 2 sets of coverages are selected. There is an action of making it mandatory that they have to choose between the options that are provided here. And there is an attachment, a form to be attached just to make sure that the correct amount of detail is captured within the policy administration to make sure that the implementation goes well. So this allows you to kind of like take all of the common principles and put them together and get it working very quickly. In terms of principal coverages, we have the standard Part A, B, C, and D, and we go down all the way to offering the limits. Like either if they are like single limit, that's fine. If they are single, like per person, per incident, combined, we list them out. Like all the options are right there and available. You can choose to keep them or like modify them based on what you would like. And we do that for every single type of coverage, if you will, and make it easy for implementation. This is going to take a while because I've been clicking too much on it. In terms of additional coverages, we have a whole lot of options that you can choose from, diminutive value to diminishing deductibles, all the way to limited Mexico coverage, audio, windshield. The details are like very, very similar, where we give you the rule, the logic for choosing, and the form to attach, just to make sure that you captured the details. Now, condition exclusions are an interesting feature of the mind map, where we again offer the exact things, but these are specific things that need to be done, specific actions that need to be enforced at the policy administration level, just to be compliant and make sure that all of the attachments, forms, or the logic operates correctly. And we have got like a small set there, but it's kind of like complete to what we would like to be capturing there. In terms of exclusions, when users want to, when your agent wants to exclude certain pieces, we offer like more guidance there on exactly when it comes in play, what forms to attach, and how best to take care of it. Very similar to what we kind of like described. Once you import the main components, what we do is like we offer a state-specific description of what is applicable to a certain state. And here we have an example of Illinois. And if you think about it, we just take the same structure that we have for the multi-state piece, and then modify the very specific. So some personal auto questions will be modified. Coverages will be modified for Illinois. Additional coverages are modified, and conditions and exclusions are slightly changed. There's only 2 exclusions that are changed and 1 condition that is changed based on the requirements of the state of Illinois. So overall, what we are trying to do is make sure that we give this framework to your implementation engineers to make it very easy for them to implement, get going with the adoption of the program, and modify it as things go, as things change or evolve over a period of time, because we intend to keep this up to date as we modify our program. I hope this helps.
All right, Ash. Thank you. Thank you very much. I thought that was very informative, and I hope our audience members did as well. We've got a little bit of time left here for Q&A. As I mentioned before, there is a button to click at the bottom of your Zoom screen. Please, if you have a question, click that button and submit that question to us. And be assured, any question that is asked, we will respond to. We may not get to everything during the time that we've got allotted, but we will follow up and make sure that your question gets answered. So again, please go ahead and submit those questions. I know we have had a couple come in already, and that's great. So Ash, how does one compare their existing program to the AAIS program?
So we have a interesting technology in-house. We can take your program and like do a side-by-side comparison. We have a machine learning system that kind of like compares like whatever custom standard program that you're using or custom forms that you kind of like have. And we will give you a side-by-side comparison and tell you exactly where we are similar and where we are different. So just having a good view of where we stand versus the current program becomes that much more easier. And it's all technology driven.
All right, terrific. Is the AAIS Auto program implemented currently in any policy management systems?
Yes, we do have a couple of our members implementing this both in a standard as well as proprietary system that they have. We are working with our associate partners to implement this within their policy administration system. So it should just be again a drag and drop or a import from their library of available options, so that our members or carriers can quickly adopt the AIS program.
Right. Terrific. All right. One that we've got here is when looking at the AAIS personal auto program, you list standard, mandatory, and optional coverages. Is there an ability to offer company-specific coverages?
Absolutely. I would love to talk to you more about how best we can do that. So happy to connect with you and chat about how best we can do that.
All right. And here's one that's, I love this question, but it's one that I'm not sure that we've got really the answer to, but I think it's a terrific discussion to have. And that is, how have these technology improvements attributed to longer repair times, repair costs, and resulting increased rental car / loss expenses associated with claims costs for auto insurers?
Yeah, so I was doing a lot more research and trying to figure out like exactly how we can attribute like longer repair times. And the problem seems to have been the lack of components or the supply chain issues that we were running into the last 2 to 3 years. That was leading to like larger times to repair, and of course the other associated costs with it, which is basically rental vehicle reimbursement and things like that. And the second component was like the components themselves are not very expensive, but the knowledge and the technology required to calibrate these technologies was expensive and not as widely available. But with more standardizations happening, more OEMs coming out in space in most of these cars, even Tesla, for example, is moving away from using its own components to a standardized component. That will make it easier and cheaper to fix, as well as keep the vehicle up and running over a longer period of time. We are not there yet, but we will get there. And the hope is we'll get there sooner. And like at AIR, we had this discussion, the exact same discussion as well. And the time frame seems to be not that far out in the future, just because of the move towards standardization and acceptance of, yeah, these are things that it doesn't make sense to compete on or differentiate. We should just get on board and try to make it easier and simpler to save losses.
Yeah, that's a terrific answer. Yeah, one of the things that I think about when I think of that issue is, the supply chain issues that we've had over the course of the last 3 years in particular, and how just fundamental repair costs have gone up as a result of supply chain issues. And it seems like when you're talking about some of these new technologies, well, the supply is probably much shorter to start with. So the time for getting replacement parts would seem to be drawn out even farther.
Yeah.
All right. Next question. When did Mindmaps become available, and what lines of business are they available for? And additionally, are you saying they would be compatible for any management system? How about I talk a little bit about the first part of this and you talk about the last part of it?
Sure.
All right. So Mindmaps are something that we have only recently begun utilizing. And we've been developing Mindmaps now for about the last year. We've got a few products out there that are really in development, some nearing the final stage at this point in time. And we do have some mind maps out there that we would be able to share. We have, I think, handed out to some folks, some classes of inland marine, COP, and auto obviously is one of our key focuses right now. We also will have this eventually for all of our lines of business. So we will have it for homeowners, we'll have it for the new dwelling properties program, for farm owners program, which is being updated now as well as all of our commercial products. So I hope that answers that part of the question. And Ash, you can talk about the second part of this, which is really compatibility with any policy management system.
Well, more and more policy administration systems are getting better at importing and using this. So the technology is very, very simple. It is like a visual representation of what we put into a manual. You can export that as a JSON or as a CSV, and there might be some mapping exercises that may be required to be done. But if you think about the very large policy administration systems, the Duck Creeks or the Guidewires of the world, it should be very easy changing in names or changing in some references within the JSON, or maybe just moving things around. Implementation engineer would not need like days to figure that out. It's just a matter of mapping elements across, like to be compatible. So there will be work, but we are talking about hours as opposed to weeks or days. So that is the difference that we are thinking about. And with that, might as well take the second one, which is about, well, is that very similar to a semantic data graph? Semantic data graph and mind maps are slightly different, and we are working on the semantic data graph as well to look at it at a deeper level. Stay tuned for more updates on that one. I'd be happy to talk about that when we are ready. But reach out to me. I would love to hear your thoughts and what you would want from a semantic data graph, because that's the future. We need to get to that point, and with all of these newer technologies coming in place, making sure that we pick the right path would probably help.
All right, terrific. So rating examples. Do we offer rating examples?
We do have rating examples. So by every single state, we do take out, we break down step by step about how do you go about the process of rating, so that you can check, validate, and verify with your rater that all the steps are followed and know where things go wrong, especially like as you go through the algorithm.
All right, terrific. And if somebody is interested in learning more about our auto program, what's their next step?
Reach out to me. I will be giving out, sending out my information, my contact information, Naik at ASHN@AISonline.com. I'd be happy to just jump on a call, try to figure out how best we can help you. Or you can reach out to our engagement team. Most of you know who they are, and between the four of us, we'd be happy to work with you to try to make sure that you have all the answers you need to adopt and even contribute towards improving the programs in these states that we have.
All right, fantastic. Well, I think we're at the end of our time for Q&A today. And I want to say, first of all, terrific discussion. Thank you for the engaging conversation today. Thank you definitely to our attendees and all their questions. We do have a few more out there that we're going to need to follow up with folks on, and we'll be happy to do that. That's all the time that we've got today. And again, we do want to thank you for attending this AAIS webinar. And please enjoy the rest of your afternoon. Thank you.